Buddy, welcome to Canadian Mortgage Weekly. We are so excited to have you guys with us today. Today is going to be episode 14. If you saw our announcement yesterday, we were lacking a very crucial member of Canadian Mortgage Weekly, but as you can see, Joe is back with us today. Joe is a mortgage professional in the Barrie Simcoe area, but serving all of Ontario. Joe's been in the mortgage industry for over 10 years, super knowledgeable, very passionate about mortgages. So thank you so much for being on today's episode, Joe.
Thanks very much for that great introduction, Sam. As you mentioned, I'm glad to be back today. Yesterday did take me out of commission, but I'm back today and looking forward to doing this episode with you today. Episode 14, we've been going for 14 episodes. I'm pretty excited about that. And I've been really pumped about our refinancing series that you mentioned there. Looking forward to end it off on a good note today. But back at you, Sam. Sam Thompson, also a mortgage professional in the Barrie, Aurelia, Simcoe County area. Sam's been with Mega Mortgage now for over a year, and he's been rocking with the first-time home buyers, refinances, and just helping clients get set up with a very nice new mortgage. And also Sam comes originally from Ottawa, so welcome from Ottawa, now living in Barrie and is married and really likes to go out, nature walks, trails, that sort of thing, and is into folk music, so that's great. Welcome, Sam, on our show as well.
Thanks, Joe. Yes, I do like folk music. It matches the beard and glasses aesthetic that I have going.
That's right. That's right. Awesome. Great. Well, episode 14. So what are we talking about today?
Today is going to be our last video in the refinancing series, as you were saying, and we are going to be chatting about refinancing for an investment property. So there's going to be a lot of really good information. We're even going to have a special guest this morning, and today is also going to be the last video that will give you an entry into next week's draw for the $100 gift card to any retailer of your choice or any restaurant of your choice. So that's super exciting. You're on the clock now. So if you're watching this video, you have until next Wednesday, April 14th, we'll be doing the draw. So if you have any questions about today's video for Joe, myself, or our guest, please drop them in the comments below, or even feel free to direct message us over social media with any questions.
Oh, that's fantastic. Thank you very much, Sam. And if anyone has any questions that they would like to ask privately, you could also message us privately on social media, or you could always give us a call at our numbers there. Myself, Joe Bladek, Sam Thompson, or even Terry Lynn, who's not on our videos, but always a very integral part of this whole team we have at Mega Mortgage. We would love to take those questions. So refinancing for investment property, looking forward to get into that presentation. But before we do, let's start the news that we've been seeing in the market. We always talk about news, and Sam, we've been seeing a lot of news lately about this whole capital banks calling on the Bank of Canada to cool down the housing market because it's just so hot. I mean, you see it every day. Terry Lynn sees it every day. I see it every day. It's a crazy hot market, wouldn't you say?
Absolutely. This has been very busy, especially comparative to last year when COVID was just starting. Everyone was really, really hunkering down around this time last year. So, you know, seeing where we've started in 2021, and it's really kept pace with where we started the year, and it's doesn't seem like it's slowing at all, Joe.
No, it doesn't. So banks are calling the Bank of Canada and the government to just slow down the housing market. And we've seen a couple different ideas come forth. There's a lot of ideas that they're talking about. One specifically being a capital gains tax on principal residences. I'm sure you've seen that as well.
Mm-hmm.
Yeah, so with that capital gains tax, a lot of speculation on that. There is no confirmation on what's going to happen with that. And from actually reading the articles, I think Justin Trudeau has gone on record saying that he has no plans to actually implement a capital gains tax on principal residences. However, it'll be interesting to see if Canada does that, which is similar to how the United States does it. Will they allow the Canadian taxpayer then to deduct their interest payments on their mortgages like they do in the United States? If they do, that would help offset that. And even if the Canadian government does that, I'm not too sure it's going to cool down the housing market either. Everyone wants a home, and there's a shortage of homes right now.
Mm-hmm. Yeah, that would be a major shift if they added that to a principal residence. It certainly would add a lot of changes and have a compound effect of how, buyers' mindsets are going into purchasing new homes, or, first-time buyers especially.
That's right. And there's another, what I think a better option that they've been throwing around is a speculator tax. So that would be for foreign buyers buying real estate in Canada, speculating that it will go up in value. And that real estate typically sits empty, and it doesn't really get rented, and it doesn't have anyone living in it. And because of that, there's just it creates more of a shortage of homes in Canada. So that would be a good thing, but again, not confirmed. The third thing that they're talking about right now in Canada is increasing the amortization period to 30 years for first-time home buyers only. Right now in Canada, a first-time home buyer typically has less than 20% down, as you know, Sam. And because of that, they need to put down anywhere between usually a minimum of 5%. And because of that, they have a max amortization of 25 years, which qualifies them for a lower home than they would otherwise if the amortization was 30 years. So it's very interesting.
Yes, yeah. And that would definitely help with the first-time buyer sort of market, because what we're seeing with these, crazy prices, low inventory, is they're kind of being boxed out unless they are getting, extra gifted funds or having co-signers on their mortgage. This would actually really help give them some room to, get into the market and give them, more of a chance and more stability in finding a home that they actually want.
You bet. That's right, Sam. So that's enough of the news for now. It's we're trying to get to our special guest this morning, and to do that, let's pop into our presentation before we add our special guest and go over some very basic fundamentals about what we're looking at. So I'm not sure if you guys can see that there.
Yep.
If you guys can see the presentation, but what I wanted to just go over is just some of the basics of what goes on when you want to purchase an investment property. And I'm going to cover the basics. So if you have any questions, drop them below or email us, social media, give us a call and chat with Terry Lynn. Any of those options are available. So let's move on. So why would someone want to buy an investment property? So there's a couple different reasons, one of them being high return on investments, diversifications from stocks. There's some tax benefits. We talked about being able to write off interest on a principal home, but if you own a rental property, you can actually write off that interest against the income, which helps bring down your taxable income. Also an inflation hedge. So instead of keeping your money in cash and your cash is worth less every year, it's actually growing with the value of real estate. And if you have no pension or any sort of retirement plan, you would actually be able to have your rental property paid off in a number of years and then provide you with some income. So reasons not to buy an investment property. And this is something, Sam, that most brokers and mortgage professionals don't go into. And there are reasons why you would not want to buy an investment property. And that would be things like you want to get rich quick. That's not a get rich quick scheme. There's obviously improvements you'll have to do to the property, maintenance. Sometimes you won't make any money at all in the year because there's so many improvements and repairs that need to be done. You don't understand how property investing works. I would recommend getting a book or talking with a real estate agent or us about that, and we can help you understand how property investing works. And Sam, there's another one, that's fear of missing out. We've been seeing a lot of people getting in the market this year because of fear of missing out, and that's not a good reason just to get into the market.
Yeah.
And I don't know about you, Sam, but when we talk with our clients, sometimes our clients really don't understand their own finances. And if you don't understand your own finances, I would not recommend getting into an investment property because things can spiral out of control pretty quick if you don't have a handle on what's going on.
Hmm.
And the last thing, and probably the most important thing, is if you don't want to deal with being a landlord or dealing with property management companies, then don't go into owning an investment property because there is that extra amount of work, whether it is that you're landlording yourself directly, or if you're dealing with a property management company, you still need to deal with them when they're coming up with issues and figuring out how they're going to work that out. So as we get into our special guest, what I'll just cover off is how mainly people buy properties without their own savings. And this is what I'm asked about as well. Some things that people can do is they can partner with an investor that has the cash. Maybe you know how the market works and you know all the information, but the investor just wants to put the cash in. You can partner with them. Use seller financing, a financial gift from family, using a home equity line of credit, and remortgaging your home. Now, Sam, we see number 4 and 5, home equity lines of credit and remortgaging your own home, as the top ways people do that. However, we don't recommend necessarily that the home equity line of credit is the best way, because if the bank ever notices that you have any sort of instability or risk to your name, they can actually call that line of credit and make it payable within 30 days in full. And most people don't realize that's actually in the fine print. Now, if you're okay with that risk, it's a great product because you're only paying interest on the money you borrow. But remortgaging your home is the most preferred method because the bank won't call a mortgage that the same way that they would a line of credit.
Mm-hmm.
Now, how does the process look like? You contact Sam, myself, or Terry Lynn to get pre-approved. We submit your documents to the lender, get you pre-approved. We connect you with the real estate agent, local real estate agent to your market. And once you find the property, we finalize the mortgage, do an appraisal, and then the lawyer finalizes all that paperwork. I'm going to go through this a little bit quickly here because we're just waiting for our special guest to join here, and I want to get through this information first. And as you know, if you have any questions, pop down below, and we can explain to you in more detail. Here's Jack and Jill's typical situation. They have a mortgage of $265,000, and they're paying $1,366 a month. They want to buy an investment property. How do they do that? Well, they take out an equity takeout on their mortgage for down payment and closing costs. And then they have a new mortgage with a little bit of a higher payment of $1613.59 per month. From that, they will use the funds that they get from this equity takeout to fund the lawyers on the refinance, on the purchase, the land transfer tax, down payment, and $27,525 left over for repairs or vacancy fund. The new mortgage on the rental property, we recommend variable, but everyone is different. Variable specifically because it has the lowest penalty. If you want to get out of being an investor, then at least you can get out without having a large penalty attached to your mortgage. And then you can always lock in later if you want to remain an investor. And then from that, the new mortgage on your home, the new mortgage on the rental property, and the rental incomes. In this case, Jack and Jill bought a duplex of $3,600 a month. They now have extra cash flow of $426.58 a month. These are very generic numbers, but we wanted to show you just very basically how it would work if you were to buy an investment property using the leverage of your own equity. If you have any other questions, do contact us. And as we now move on, I want to introduce our new speaker. So as our speaker joins our call right now, our guest speaker is Chris Bladek. He purchased his first property in 2012. Since then, Chris and his wife, Leona, have leveraged to expand their investment portfolio quite considerably across multiple properties, having many doors. And actually, they even completed their first BRRRR in 2021. So I would like to introduce Chris Bladek right now to our episode 14 Canadian Mortgage Weekly. How are you doing, Chris?
I'm doing well, Joe. How's it going with you?
Oh, pretty good. Thanks for joining me and Sam on this episode today.
I appreciate it. Yeah, thanks for having me as a guest.
Oh, my pleasure. My pleasure. We're looking to pick your brain today because you being a seasoned property investor, it's always good to be able to chat with someone that has done it before. As you know, a lot of people talk a lot about being an investor and don't really pull the trigger. However, you've been one of those folks I've known that have gone right into it.
Yeah, and I think one of the reasons why we decided to go ahead and pull the trigger on purchasing a rental property is to really build the wealth, and look at retirement, and look at what did we want to do with our kids moving forward as they get older, and real estate is certainly one of those things that can really help with that. We also took a look at the stock market, what kind of returns you can get from that as well. It is more risky in terms of that. And we just felt that real estate provides that very predictable increase over time. We haven't seen real estate prices go down, especially actually very recently with the dramatic increases. And we just plan on continue doing this for the foreseeable future.
That's great. Wow. What a great testament there. And yes, like you're saying, compared to stocks and mutual funds, those can be quite volatile. I mean, you're invested, and then all of a sudden you can check back and your portfolio can go down or up based on market news, based on just announcements companies make, and you can lose 50% or even gain 50%. And it's not a very predictable way to invest. So tell me a little bit about how you got started with your first rental property and how that all went, and what things you learned right off the bat.
Yeah, so the first property that I purchased turned into a duplex, and I lived on the main floor, and created a basement suite, and this is all in Hamilton, maybe about 8 years ago, or maybe even further than that. And the reason why that I wanted to do that was to really help with the monthly expenses. So your mortgage, your utilities, really optimize on that, and try to live with the least amount of expenses on a monthly basis. And that worked out really well. I mean, we had to go through a very rigorous process of weeding through different potential tenants, just to make sure that the people that we put in the basement were the right people for us, and the people that would pay rent on time, and would really be good tenants for the long run. We still own that property today, and we just like this strategy. I mean, like you said in your example, you're able to certainly get cash flow from the property, get the mortgage pay down, and get the appreciation, as well as get the annual rent increases, which all contribute to your bottom line.
That's great. Yes. You mentioned that you really got into it, selecting the proper tenants and making sure that they will pay each month. So that is very important, as you know. So you are actually directly landlording your properties, or do you use a property management company?
I am directly the property manager for all the properties that we have in our portfolio. It's something that some people may consider if they want to. There's a lot of things that come into this. For example, do you want to be the lead contact for any kind of repairs that are required for the property, or do you want to simply outsource that to someone else and take care of it? In our case, I decided to be that individual, just because I'm comfortable with that. And for the first property that we had, I managed that. So I have that knowledge.
Awesome. And I'm sure that as you've grown your portfolio and had additional tenants added to your list and all the doors you've added, it maybe has become harder in a sense because there are more tenants, but also because of your experience, you're able to now work on it a lot more efficiently and probably outsource certain things to different trades instead of doing the work yourself. I remember you used to do a lot of work yourself for the repairs and all that.
Yeah, that's right. And one of the misconceptions that people think before they even consider purchasing a rental property is that they're in it by themselves, and that's just not the case. You have to build a team around you. So that's your mortgage broker, your contractor, your trades to help with the different repairs that are required for the property, the lawyer, and so on. So there's a team that surrounds you to really help you along the way to make sure that the property is running like it should.
That's great. Yes. Good point. And as you know, Sam, it's good to have a good team behind you and to have like that team with you. And Chris, that's good information. So anyone that's watching out there, if you're looking to get into an investment property, we have investors that deal with us, Chris being one of them, and he's actually done really well for himself. Him and his wife, Leona, have been able to acquire multiple doors now, and they've actually together completed a BRRRR, which is a buy, renovate, refinance, rent, refinance, and repeat strategy. I always get those mixed up. And I know that you guys have been working on that for quite some time. So it was pretty successful from what I've heard. Is that right?
Yeah, it was very successful. With the real estate values dramatically increasing, we didn't anticipate to be able to do so well on this project, but essentially we were able to purchase the property, hire an outside contractor to take this bungalow property and duplex it, renovate both floors top to bottom, and be able to pull out all of the money to pay off the down payments, to pay off the contractor, as well as have some excess cash after the deal. And I just want to make sure that I state that this is not something that's common. It's just as a result of the increased real estate prices that had contributed to that.
Great. So a combination of getting in at the right time, but also knowing who to call, who to have on your team, get it done properly. Also an appraiser, everyone on board to get this done. So that's fantastic. Wow. And so how much of your own money? So you bought this property with your own money, with leveraging, but how much of your own money do you have in this property right now?
Well, I mean, after the refinance, we don't have any money in the property at all. We were able to pay off the down payment as well as the contractor and any type of other minor things that we needed to address, as well as lawyer fees, and we were able to come out ahead. So we have cash on hand that we could redeploy into another property.
That's great. So are you looking to redeploy and get into another property already?
So we're already going through that process of evaluating different properties to see what would work best for the portfolio. And we continue to leverage that BRRRR strategy that you were talking about, because we feel that that is the best strategy for us, because we're able to recycle the cash and then redeploy for the next property.
Wow, that's fantastic. That's all great tips, you know. So as anyone's watching out there, if you have any questions for Chris, Sam, myself, Terry Lynn, pop them below right now. If they're live, we can ask Chris right on the air. Sam, let us know if there's any questions. If there's not, we'll make sure that we get your question to Chris if you have a question for him. Perhaps you're an investor that's looking to get in the market but don't know much about what's going on and how to invest in real estate. I'm sure Chris would be able to chat with you if you're looking to partner up with somebody. I don't know if you're looking for any partners right now, Chris, or if you are doing this on your own.
Yeah, I mean, so far we've done it on our own, but we're certainly open to having any type of conversations with anyone who would like to get involved as a partner.
Awesome. That's exciting. Awesome. Well, thanks very much for joining us. Do you have any other tips that you could share to any new investors, people that own their own home right now, who have been sitting on the fence about getting into property investments? I know there's a lot of people that I talk with, and Sam talk with, and Tara then talk with on a daily basis. You know, people that want to get into investing in property, they go through the motions of getting everything set up, but they never actually pull the trigger. So maybe you can give us just a few final tips here today.
Yeah, it's a great question, because I do talk to a lot of people that are interested as well, but have a difficult time pulling the trigger. And some of the things that I see are people thinking that, you know, buying a house is the largest purchase that you will ever have in your lifetime. And it's hard to comprehend that you'll be doing a purchase for someone else to be living in that house.
Yes.
But if you run your numbers correctly, you'll be able to cash flow the property, and when you do that, you'll be earning on your money. And like I mentioned earlier, investing in real estate is safer than investing in, let's say, stocks, because of the volatility is not there, at least now, from the real estate perspective. So, and then as well as building a team, don't think that it's just you alone in this. There is a team supporting you. So that could be from your realtor, your mortgage broker, your lawyer. You're not in it by yourself.
That's awesome. Thanks very much for coming on today. Sam and I appreciate it. And I know you and Leona have done really well. So thank you for sharing a little bit about your experience and giving some tips to everyone out there, those who are looking into buying their first investment property for the first time. So thanks very much, Chris, for taking the time out of your day to join us.
Thanks for having me.
Yeah. All right. We'll see you next time.
Take care.
You too. All right. That was great. It was really great having Chris there. Wouldn't you say, Sam?
Absolutely. I think it's nice having sort of feedback and comments and tips from firsthand experience. I know that it can be daunting for anyone, like you guys were saying, that are sort of on the fence, to actually see how it plays out when it's, you know, somebody who's been through the entire process, and tips that he's learned along the way.
Okay, that's great. Yeah. So as you're all watching, if you're thinking about getting into investing into rental properties for the first time, we deal with a lot of folks like yourselves. We like to go through the numbers with you, show you exactly how much your mortgage will change on your personal property and how much mortgage you can then afford on your next property. It's all very good information to have. And if you're looking at doing something like that, and you're unsure about how much you can afford, give us a shout and we can definitely help you navigate those waters together. And then you can then make an educated decision, as Chris was saying, just knowing the numbers and how that's all going to affect your portfolio. One thing I always like to just illustrate, as well, is that when you buy rental property versus a stock, you're making money at it differently than a stock. If you buy a stock for $10 and it goes up to $12, you've made that $2. That's fantastic. Same if you buy a rental property, you buy it for $500,000, it goes up to $550,000, you made that gain, the $50,000. But what people don't understand is there's two other ways you can make money off a rental property. The other way is that there could be a cash flow every month where all the expenses of the property versus all the income, there's some left over. There is that as well, and that's an ongoing cash flow. And then on top of that, there is the ability to earn money from the mortgage pay down, because your tenant's actually paying your mortgage and you're not paying that loan. And as you have that mortgage pay down, you're not noticing that money every month. You're not noticing that money every year, but you're noticing it at the end when the mortgage is paid off, and you either decide to sell the property or you decide to then take more cash flow from the property for retirement income. Awesome. Sam, do you want to just remind everyone of the contest that we have going on? I'm really excited because we're giving away $100 to a local business or a local retailer restaurant of their choice, right?
Yeah, absolutely. So again, if you are watching today's video and you had any further questions for Joe, myself, Terry Lynn, or even for Chris, please write them in the comment section below. If you know somebody who is interested or is already on the fence about it, feel free to share this video as well, because those are all going to be counted as entries into the draw that we will do next week. For $100 gift card to either the retailer or the restaurant of your choice. So this is going to be your final chance to get in on the savings. And yeah, it'll be really exciting to see who wins that $100 gift card next week.
Yeah, well, I'm looking forward to it because it is going to be to a local business or local retailer, restaurant. And we want to make sure that we're supporting local businesses as much as we can. So whether you're in London, Waterloo, Kitchener, Ottawa, Toronto, Barrie, Aurelia, wherever you are, you're eligible. Just leave a comment or anything, share this post, or send us a private message. We'll enter you in that draw, and Sam and I will do that draw next week on Wednesday at 10:30. And depending how many entries we get, Sam, I'll either have my snare drum out or I'll bring out the entire drum set. So let's see how many entries we get, and then we'll have our draw next week.
Sounds awesome.
All right, so stay tuned to our Facebook page or our YouTube channel or our Twitch channel or Twitter to see what we're going to be talking about next week, and we'll do the draw then. Thanks for joining us, everybody.